Beijing has built strong defenses to cushion the shock of U.S.-led economic aggression, but the confrontation can throw emerging economies into disarray. The U.S.-China trade war has escalated dangerously, after the United States applied 10% duties on Chinese imports worth $200 billion, set to go into effect on September 24. Trump seems keen on gradually implementing the tariffs, with the next round of tariffs reaching 25% scheduled for January 1 next year. In view of the upcoming midterm elections, political experts argue that Trump is aware of the negative impact tariffs can have on his low-income voter base with their reliance on competitively priced Chinese imported products. Though the U.S. Commerce Secretary Wilbur Ross tauntingly declared that China is out of bullets, experts on the ground paint a different picture. Keith Wade, chief economist at Schroders, asserts that China will hold to its trade policies which have been instrumental to its ideological, economic miracle, and a future economic growth. Hassan Imran, an independent analyst speaking to TRT World, notes that, unlike the U.S., Beijing is unconstrained by the electoral cycle. He predicts that Chinese President Xi Jinping is likely to remain in office for decades, particularly after constitutional presidential term limits were abolished earlier in March 2018, while Trump, his counterpart, will have to face another election. On the other hand, Feng Xinghai, vice chairman of the China Securities Regulatory Commission, boldly asserted that the Trump administration would not be able to make any significant dent in the Chinese economy. In the worst-case scenario, he said, the U.S. can apply tariffs on all Chinese goods coming into the U.S. This, according to him, would only affect 0.7 percentage points of China's GDP growth, and that Beijing has sufficient tools to cushion the shock. As the White House comes to terms with China's entrenched position, more extreme measures may be adopted for the sake of supporters who'd like to see Trump come out of this stalemate looking good. Conscious of the upcoming U.S. midterm elections, President Trump tweeted a warning to Beijing. China has been taking advantage of the United States on trade for many years. They also know that I am the one that knows how to stop it. There will be great and fast economic retaliation against China if our farmers, ranchers and/or industrial workers are targeted. Donald J. Trump, at Real Donald Trump, September 18, 2018. Withhold Barkey, senior strategist at Nordea Investments, calls it a war over future economic supremacy. Jack Ma, Chinese billionaire and the owner of Alibaba, predicts that this is only the beginning of the standoff which could last 20 years. If you want a short-term solution, he says, there is no solution. Neither side seems likely to step down anytime soon. So are we experiencing economic warfare? A day after the latest round of U.S. sanctions, the Chinese government hit back with 5 to 10% tariffs on $60 billion worth of U.S. goods, also set to come into effect on September 24. The tariffs will target goods produced in states loyal to Trump. In 1999, two colonels in the People's Liberation Army released a book entitled Unrestricted Warfare, proposing that developing China can confront the United States through economic warfare without military action. While Beijing has avoided describing the escalating trade war along those lines, Steve Bannon, Trump's former top strategist, has previously asserted that Trump is engaged in a sophisticated form of economic warfare with the Chinese. No more imports to target. If both sides follow through on these tariffs, they will exhaust imports to target and risk further escalation. During the 2016 presidential campaign, Trump often invoked what he called unfair Chinese trade policies. He aims to make Chinese products more expensive so that U.S. businesses are pushed to move their production and supply lines out of China and possibly encourage them to return to the U.S. The official objective for the tariffs, however, is ending the theft of U.S. intellectual property, essential to the U.S. technological and economic edge. The Intellectual Copyright Commission assesses the value of IP theft to be as high as $600 billion annually. Speaking at the World Economic Forum on Tuesday, Premier Li Keqiang confidently asserted that Beijing would weather tariffs with ease, while vowing to punish those responsible for IP cyber theft, in an indirect concession to Trump. In July, Trump previously accused China of devaluing its currency to bolster its export industry, which would take the edge off of U.S. sanctions. Premier Li hit back, stating that China would never use its currency as a weapon in the trade war. While tariffs may hit Chinese jobs, Beijing can boost domestic demand to offset loss of Chinese exports to the U.S., or let the yuan slide to regain a more competitive economic posture. Emerging economies risk of tsunami of contagion. Global markets will likely feel the full brunt of the trade war before long. The World Bank's Global Economic Prospects report warns of excessive debt among emerging economies, which can be exacerbated by currency fluctuations and financial instability. If an emerging market slide takes place, the entire global economy could be affected. During the 1997 Asian financial crisis, anxiety over one market led to the rapid fall of others regardless of healthy economic foundations. Economists called it the contagion effect. The World Bank warned that conditions for emerging markets could worsen significantly. China's significant position in the global economy bridges emerging markets and developed economies. China is the locomotive that keeps the emerging market train rolling along, says Frederick Newman, head of Asian economics research at HSBC Holdings plc, Hong Kong. He warns that slower Chinese growth presents an especially acute challenge to emerging markets, after struggling with higher interest rates and a stronger dollar for their debt. In China, corporate debt is around 165% of GDP, in South Korea it is 82%, in Malaysia 51%, and in India 38%. Chu Hock Bin, senior economist at Maybank Research in Singapore, calls China the linchpin, warning that the emerging world and rest of Asia will inevitably feel the full gravity of the downforce if the Chinese economy is undermined. Source: TRT World.